Your life journey doesn't stand still, and neither should your wealth. Welcome to Wealth on the Move, the podcast. Hello, and welcome back to another episode of Wealth on the Move, the podcast. I'm your host, Will Hoffman, founder and president of Hoffman Wealth Management.
Brynn Tarbuck, your co-host.
And Brynn, it's been a while.
It has. A little hiatus there.
Yeah. And Brynn is, our office is under construction. I shouldn't say under construction. There's not big construction going on. Big for
facelift.
us. Facelift. So Brynn is in our new studio, but it's not done yet. So I am not in our new studio. We're still doing this in separate rooms, and hopefully getting ready to come to you soon in the same room in a little bit different setup, and we're working through that right now. But I'm excited for this episode because it is, to me, it's a very exciting time of the year. We are in the middle of graduation season, whether it's from high school or college or graduate school. Folks are moving forward with their intended purpose after getting their degrees. It's an exciting time. I'm envious of folks that are graduating with everything in front of them. I've always been a very future forward-looking person, excited about what lies ahead more so than what's behind us. And the stage that you're in your life right now when you're there is exciting and important. And Brynn, you're just a year away from that phase.
Just basically almost 365 out. About last week.
How's the first year been?
Good. It's been a change. I liked school. I liked it, but I was a person. I was ready. I was ready to get out there and kind of use what I had learned, and I was over the classroom.
Yeah,
I was over it. I got to a point where I was done, but I will say it's nerve-wracking because you've grown up your whole life. You wake up, you get dressed, you go to school, you go to class or whatnot, and then all of a sudden it's real life hit you, and you got a job and a lot that comes with it.
Yes, and that's what we're going to talk about today is the stuff that comes with it, and whether you are entering the workforce from high school, leaving college with a degree, finishing up a graduate program and starting a new job. These are all things that are important that we are going to discuss. Things that, if done correctly, can really set you up for a very bright financial future. Done incorrectly, unfortunately, could either put you behind the eight ball when it comes to generating or accumulating wealth, or become very expensive mistakes. And then that's what we want to try to help you avoid. After 22 years in this profession, cleaning up those mistakes can be very, very expensive. So we want to try to put you ahead. So if you're listening to this, take good notes. If you are a parent that's listening to this, share it with your son or daughter. And hopefully there's some things in here that can set you on a path to really being able to accumulate while you're doing what you set out to do.
Absolutely. And I teach you a lot in school, but unfortunately, some of these things that we're going to talk about today, they don't. And
they don't. You're right.
Some of the most important things that you should be leaving school with.
It's no secret that financial literacy in the United States is way, way down because they don't teach it. It's criminal that they don't. Some schools are starting to, but it's a necessity. And I was very, very fortunate. My first job out of college, I was a marketing manager for a steel company, and they had hired 8 of us right out of college. And they brought in a financial advisor to talk to us and just teaching us some tips, ways to save, how to use our 401k plan the right way, how to budget, simple things that, I know our profession takes for granted. Probably the biggest flaw of our profession is we don't feel like we benefit from working with folks when they're starting out. We want to work with folks after they've accumulated their wealth. And yeah, that may be profitable, but for us, it's fun to be a part of that process with folks and fun to help them accumulate, fun to watch them flourish, watch them hit their intended goals, watch them accumulate. And, after 22 years, we're starting to see the fruits of that labor. And that's fun. That for me, I've enjoyed that. I can appreciate the folks that feel like time isn't moving fast enough, and hey, I just got my degree. Why haven't they made me the CEO yet? Admittedly, that was me. I couldn't believe that CNBC wasn't ready to interview me as I was walking off the stage with my diploma. And by the way, CNBC, I'm still waiting for that interview. But that has definitely been my personality. Is let's go. I'm ready to build. I'm ready to grow. I'm ready to create. And some of these things could get lost in the background. So we want to talk about some of this. We're going to go over some things. So get your pen and paper ready. I know you thought it was over when you left school, but take some good notes. The biggest thing and the first thing to understand is understanding your financial picture. And there are a lot of rules of thumb and a lot of generalities for you to follow. What's most important first is understanding your financial picture. What does your income look like? What does your salary and take-home pay look like? What do your benefits look like? What does your student loan situation look like? Understanding how your financial picture works is paramount, rather than just watching a video and saying, okay, I have to save X percent to accumulate this. Make sure you have a grasp of your financial picture first, because none of those generalities matter if it doesn't apply to what's going on in your life. Track your expenses, understand, not only what's coming in and what you're earning now, but also what's going out. I remember when I had that first job, it was probably the most sage advice my dad had ever given me. And it was plan your work your plan, and understand, make that budget right away. Understand what's coming in, understand how taxes are going to apply to what's coming in, so that you know the type of rent you can afford, the type of vehicle that you can afford. Because, one of our first episodes as we rebranded as Wealth on the Move was talking about lifestyle creep. And if you don't get a handle on it at the beginning and understand right away, this is what's coming in, this is what I have to spend. If you don't understand that first, you're going to be making errors along the way.
If you're getting your first job, it can be easy. Those might be your first big paychecks you've ever had. It can be easy to want to go splurge a little bit. And then that creeps up on you. You're in that lifestyle creep when you should have just taken step one, looked at your big picture, and slow down a little bit.
And then from there is where you do your financial goal setting. From there, you can understand, okay, I can save this. I want to buy this kind of car. I want to live in this kind of apartment. I can spend this on rent. But first, just understanding what your financial life looks like is paramount before that goal setting. Thank you so much for listening to the Wealth on the Move, the podcast. We know this is an exciting time for you, and we want to make sure we're getting you some information beyond just what we're talking about right now. So in the show notes, there's access to 4 different white papers for you to have to maybe be your guide along this path. The first is 7 Principles of Long-Term Investing. The second are 8 Timeless Principles of Investing. The third is some things about being insured at every stage and how to navigate insurance as you're starting out. And the fourth is just 6 very important strategies for your 20s and 30s. It's great data, great information for you to have on your path forward. And again, we appreciate you listening to Wealth on the Move, the podcast. And now back to our episode. And then start budgeting. And I know this is the most boring, square thing to hear, and it's not fun to do, but start planning a budget. A great strategy for planning a budget is a 50-30-20 rule. And what that is 50% of your budget should be spent on what you need. You have to eat. You need health insurance. You have to drive or get around. You got to have a roof over your head. You have to have those things. Understanding what you need to spend your money on should be about 50% of your budget. The next 30% is wants. And I know this is, going to maybe contradict some very popular financial advice that seems to get the most traction, but make sure you understand what you want to do. Make sure you are doing what you want to do, especially in the phase of life that you're in. Listen, we get these jobs so that we can enjoy our lives. Money is a utility to enjoy those things. Go enjoy those things. Take the trip, buy the clothes, shop, do those things, but just make sure you're doing it with 30% of your budget, because you don't want to get, it'd be nice to have a beautiful, luxurious car, but you're going to have the money if you are not factoring in some things. Build in a budget for once. Go do the things you want to do. Just make sure you're doing it wisely when it comes to how you're saving and accumulating. And then the other 20% go into either savings or debt repayment. Listen, the college loan stuff is not lost on me. It's expensive. It's due. What is it? 6 months after you graduate, they're sitting there waiting for their loan payments. Make sure you understand that. Get on top of it early. Get them out of your way, so that you can move on to do those things that you want to do, and make sure that you're doing the things that you went to school to do, that you want to achieve. But if you're dealing with student loans, if you're dealing with school debt, if you are working your way through college, make sure that those things are part of your budget and your spending. Because listen, the interest rate starts clocking and they are ready to get paid back.
Yeah.
And, I know that there's a lot of discussion about what should and shouldn't and what's going to and could happen with student loans. In the meantime, get them paid back so you can get them out of your way and move on through your life.
6 months might sound like a long time, but once you walk across that stage,
Boom.
6 months sounds like tomorrow, and they're knocking and asking. Payment one's due. So.
Yeah, just some sage advice from time is quick. Yeah. And it gets quicker every day after you get that degree.
It does.
Create, a practical budget using that 50-30-20 rule. And then I know it becomes a challenge to try to stick to it. Automate what you can. Automate savings. Automate your bills. Look at your budget from week to week. Again, it's not the fun stuff that anybody talks about. It's not the fun stuff that you see on television or that YouTube creators put on there, but look at it from week to week. Understand what you have. Understand where you're going. Listen, these are your goals. So nobody is going to keep track of them for you.
Right.
Keep on top of them and look at them from week to week.
Right. Most important things in life most often aren't fun.
Right.
So they got to be done.
But they got to be done. Right. You want to get to the beach, but the flight is never the fun part.
Yeah. Or in my family, the drive.
The drive. So now start thinking about your debt. Again, understand your student loan situation, what the bill is going to look like, what the interest rates are going to look like, how to plow through those as quickly as possible. Not fun, not easy, not enjoyable, but those schools come with a price tag, and the loans are going to want repaid. Understanding how to build credit the smart way. Student loans and paying them on time is a great way to build a great credit portfolio for yourself immediately. Managing credit card debts. And this is one that there's a lot of incentives to use credit cards. It's a great way to build the miles to pay for the flight to get to the trip. There's a lot of resources that you can use to do those things. And there are plenty of resources to find on YouTube on how to maximize using points in credit cards. Just be very careful that you're not overextending yourself with those. Again, it can be expensive to run up that credit card bill to try to get the points for the trip. So just be cautious on how you're using your credit cards. Be wise. They want paid back too. So make sure, I shouldn't say want, they're going to get paid back one way or another. So make sure that you are being very, very smart about how you're using those credit cards and what kind of debt repayment strategies that you have. When you're putting that 50-30-20 together, that's got to come, some from the 50 and some from the 20 a little bit to accumulate those, or to knock those out. And now the fun stuff, the stuff that we do every day. saving and investing. How should you start saving? Where should you invest? How should you start this whole thing? Because firsthand, we know nobody had a class for you on what to do in your 401k. Nobody had unless you studied finance, nobody was teaching you how to invest or where to invest or how much to invest to accomplish a certain goal. This is where the rubber meets the road, and you unfortunately could find yourself on your own, which is exactly why we're doing this podcast episode. The first place to start, and don't let anybody tell you otherwise, the first place to start is by creating an emergency fund. The range is always 3 to 6 months. I would tell you to have 6 to 8 months of your salary budgeted and saved that's not exposed to the market, that is in an accessible place if you need it in the event of an emergency. And emergencies range from all different types of emergencies: a healthcare emergency, an accident, if you lose your job. I know that we're doe-eyed optimists right now, and we are ready to go, and they're going to make me CEO. Unfortunately, sometimes your employment situation isn't up to you. Yeah. And if it's not, you want to make sure that you can cover your expenses for a prolonged period of time if you were to lose your job. 6 to 8 months, you will not regret having that safety net there if that were the case.
I mean, that can range from anything. I mean, look, we just had one of the biggest storms in history here.
Right. We still have folks without power in the greater Pittsburgh area, right?
Power, we had roofs fly off, we had porches fall. I mean, you never know what the emergency could be. So have that in your plan. Have
it ready. Car accidents, things happen.
Anything,
and making sure you have that, it's the first place to start. And then start investing. It's important. They don't teach us this. Having an investment strategy is where you're going to help yourself accumulate and have your money working for you as you are saving and as you are earning and creating. They don't teach you about compound interest. I think it was Einstein. I'm pretty sure it was Einstein that said the most powerful force in the world is compounding interest. So making sure, I'm sure folks around our area would say it's wind or water right now, but the most powerful force in the world is compounding interest. And it doesn't take a lot of science or research to understand. But when you're doing that and when you're starting a saving strategy, please there is no silver bullet. I've never seen it. 22 years, there's been investments that have done great. There's been investments that have done poorly. There's been good markets. There's been lousy markets. There has never been a silver bullet that I've seen other than our ability to work our tails off and create. You are the silver bullet when you're listening to this. Your ability to earn and create and grow, that's the silver bullet. Be willing to get wealthy slowly. Bravo doesn't tell us that. The Kardashians don't say, hey,
that's going to hurt for some to hear.
Be willing to get wealthy slowly. Let me explain to you what I mean about compounding interest and getting wealthy slowly. When you start an investment plan, if you were to start the day you left college, the day you left high school, the day you started working, and say, I'm going to save $500 a month for the next 40 years until I can retire. And I'm going to increase that $500 a month with an average inflation rate of 3%. So $5,000 or $500 a month becomes $6,000 this year. Next year, it's $6,180. The year after that, $6,365. See, that's compounding interest because that's what's happening with what we're spending. It's compounding with inflation. So we want to make sure that what we're saving is also keeping pace with inflation. And if you were to earn an interest rate, a return from those investments of 8% in those 40 years at $500 a month, increasing by 3%, earning 8% would amount to almost $2.5 million. Okay? It's not fast. When you make that first $500 payment and you see 47 cents as your return in month one, you're going to say, what in the world am I doing this? Compounding interest can be your best friend when it comes to a savings and investment strategy. Feel free to check my work. I just used calculator.net to make that example, but $500 a month, increasing by 3%. It may hurt that first $500 payment that you make or $500 investment. My accountant was the one who's told. He says he tells business owners save until it hurts and then save a little more. And that's not a it's not a fun strategy to hear, but that it doesn't matter. Forget whether it should be in your 401k, in your Roth IRA. None of that stuff is as important as starting the diligence of a saving and investing strategy. Brynn, what are your thoughts about that?
I wish that they would teach more of it in school. I would, last year working here, year and a half, learn more words than were ever brought up in school. Granted, I didn't go to school for finance, so therefore don't think I,
but it affects all of us.
But it does. And if
it doesn't matter what you're studying. It really doesn't.
And if I wasn't working here, I'm afraid I wouldn't be in this urge to invest and want to do things. And then what would happen? So it's something I urge more education on.
Yes,
for sure.
For sure. It is. It's like I said before, it's criminal that it's not taught.
Yeah.
It's I almost the miseducation. I think I've talked about it before on here. The bank that does the Little Savers program at my kids' school makes me so mad. Every time you go make a deposit with them, granted, they're starting to teach them to save something, but they give you some worthless tchotchke, like a stress ball or a keychain or something. They've paid these kids 0% interest on these accounts. So they're not they're teaching them that banks give you free stuff for giving them money, but they don't give you a return on it. It's
a piggy bank.
It's maddening. It's maddening to me
wow.
when I see that and wish that there was a better path forward. And maybe we just have to create that path. I don't know. But understanding savings is important. How you invest, where you invest, all of that stuff is for you to work out with an advisor, understanding your risk profile, understanding how comfortable you are with risks. I will tell you, in those 40 years, the market is going to go down at some point. There is going to be complicated markets where you feel sick to your stomach. What I would caution you is to not let your belly outrule your brain when it comes to that time period. It's going to happen. It's going to happen plenty of times. There's going to be a lot of noise in the next 40 years when it comes to investments. Probably more noise than on any other discipline, which is ironic because we don't teach it. But you're going to hear noise. You're going to hear advice. You're going to hear tips. You're going to hear that somebody may think they have a golden bullet. You're going to hear ways to avoid taxes. You're going to hear that this is the best investment strategy. All of that is not as important as the diligence of saving and investing and understanding your risk. The rest of it, please work with an advisor. I know that I'm an advisor. I know it sounds like a Homer idea and a business building mechanism, but our job is to help you get through that BS, to get through that noise, to understand, yes, the market's uncomfortable right now, but this is the benefit of time in the market, not timing the market. And understanding that is paramount. So take this clip, rewind it, listen to it 20 years from now, because I know the market is going to have its troubles at some point in time, all throughout the course of the next 40 years and beyond. Listen, you're saving for 40 years for hopefully a 40-year retirement.
Right.
Understanding that is very, very important, and understanding that head down, save, invest, find help from an advisor you trust becomes very, very important.
I think you've made it pretty clear, and you said it at the beginning, but also understanding that you're not too young to reach out to a financial advisor. Right. I was also under the assumption, because again, this is things that they don't teach you, that financial advisors were for people that were retired and needed help with their retirement or were getting ready to retire. And then I start working here, and there's young people having kids, and I mean, there's clients of all ages. It's not too early to reach out.
Our own marketing fails us. We put old people holding hands walking down the beach on the cover of every financial magazine, brochure, website. It's we're doing it to ourselves.
Yeah.
This
Yeah.
isn't about the, invest to create the next great company, the next great business, the next great idea. It's not just to be old and hold hands and walk down the beach.
Absolutely.
When you get to that point, great.
Yeah. Yeah.
Enjoy walking down the beach, holding hands with your spouse, and frolicking in the tide. But until
You earned
then,
it.
listen, you're here to create. We
Yeah.
weren't put here to just go to work, pay bills, walk on the beach and hold hands. There's a lot that's going to go on from the time you were handed that diploma until the time you get to walk on the beach holding hands, and making sure you're navigating that. Again, advisors that you can trust are important. I will always do my commercial for the independent advisor channel because I know that's where my peers are. My peers care about their clients. We live with them, we die with them. They're friends, they're relationships, they're important. We just spent time with a lot of our peers at a big industry conference for our firm, and they're the best people I know in this business. I mean, they're incredible people, and the independent financial advisor channel to me is where you're going to find the most benefit, the most supportive environment for navigating this world when it comes to your money. The fifth thing to think about is protection. All right, is financial protection. Now, if you thought the other stuff was boring, you haven't seen anything yet. But it is so important to think about insurance in all aspects of your life, from your health insurance, whether it's from your employer or on your own, whether it is your homeowners and auto. Again, just went through some pretty nasty storms here, and I don't think anybody right now regrets having to pay a premium for homeowners or auto if they were caught in a down tree or power outages for multiple weeks. You don't think it's important. We don't think it's necessary. Listen, I grew up in an insurance environment. My dad owned his own insurance agency for 50 years and watched him tell people the right coverage to have, not the cheap coverage to have. And it's not always an easy conversation, but making sure you understand your insurance coverage is important. Making sure you're adequately covered. If you're just starting out and you're renting, making sure you understand your renter's insurance, making sure you understand your auto insurance. Listen, crap happens. It's going to happen. Million years we've been on this planet, crap has happened. For the next million years, it's going to continue to happen. Insurance is a way to protect it. It's not fun. It's not cheap. It's not exciting. It's premium payments that you would otherwise be using on a flight to the beach, but making sure that your insurance premiums or making sure your insurance policies are understood is important. We just had Philip Coniglio on, understanding how to protect ourselves from a cybersecurity standpoint. Understanding all of that is important. Don't be haphazard with your passwords, with your credit cards, with your data. Keep that safe, keep that protected. There's plenty of ways to do that. Listen to that episode if you're looking for strong ways. The one thing I'll tell you again that Philip hammers to us, because he's our advisor, is passwords. I think the startling statistic was, what was it? An 8-character password can take 2 to 4 minutes to break, but a 12-character password takes years.
200 years. Yeah, he went from 4 to 6 minutes to crack a password to 200 years just by adding 4 characters to your password.
Yeah, absolutely bananas. That's so. Make sure you're taking care of that, and then the non-financial stuff and how that can creep into our money is so crazy. Take just your health, for example. Taking care of your health is important. We all know that. But it is a great path to wealth. Not having expensive procedures that you have to pay tons of deductibles and copays and things for. It's a gym membership is probably much cheaper than that copay or that monster deductible on your plan. Taking care of, it's a way for longevity. It's a way to feel better. It's a way to, I'm not a fitness expert by any stretch of the imagination. However, I know when I am in better shape, I feel better, I produce better, I am better at my job, I'm a better father, I'm a better husband. That's the only experience I can speak from there. But building good habits aside from your money is important. The one chapter in Dr. Crosby's book that we talked about a few episodes ago also was how important that non-financial stuff is. Your relationships become important. At a certain point in time, a lot of us are going to get married and we're going to merge financial backgrounds. We're going to merge financial habits. We're going to merge financial accounts. We're going to merge all of that stuff. How you approach that is important. I can't say that enough because we don't all have the same financial background. So making sure that you're getting that stuff out in the open before you enter into that arrangement is going to prevent a lot of crap on the back end. We know the statistics about divorce, and most of those divorces, unfortunately, are financial in nature. That's where they stem from. Head that off ahead of time, because I don't think anybody that's gone through a divorce will tell you that it's cheap and easy.
Right.
Okay. There's no coupon for divorce attorneys. So making sure you're going through all of that is important. And understanding the documents and things and the wills and everything. Again, great episode with Ashley Sharek a few episodes ago. Tons of insight. Probably the most important episode that we have discussed to this point is understanding how all of this stuff either gets to us or gets to somebody else, and how to make sure that it's not getting to the IRS and 85 million people we've never met is a very, very great strategy, or a great episode to check out from Ashley. But building those, listen, there's books everywhere. There's podcasts like ours. There's videos. There's YouTube channels you can follow to build good financial habits. Just getting yourself into that space is important. Ideally, the Wealth on the Move podcast is the place to come get that information. If not, there's plenty of other ones. Our good friend Drew Boyer just wrote a great book about financial literacy and merging that with hip hop. It's a great way to get that financial backbone and enjoy doing it. It's probably a lot more fun to read than listen to me talk about getting the right auto insurance. But it's essential. Just get that information from wherever it is that you can, because it's important to have, it's important to maintain, it's important to stay on top of. Brynn, what are your thoughts? With any
I know I'm going to rewind this and take some notes. I mean, I'm only a year out, but it's still just as important now. I mean, I want to accumulate and, like you said too, take care of yourself, because you're working hard and you want to be able to enjoy this one day, be healthy so that you can go walk on the beach in your retirement years, or go hiking, or whatever it is that you want to do. So taking care of everything from all around, not just the finance.
I agree. And again, I think I said this at the beginning, I'm so excited for folks that are, graduating in any capacity right now, moving forward. I'm envious. My wife and I said there's a travel YouTube channel that we watch a ton, Kara and Nate. And we are so envious that we wish we could have done this 25 years ago, 24 years ago, when we were leaving school. Fortunately, we didn't have cell phones on our cameras on our cell phones and YouTube channels and the path to do that. But to me, there's never been a more exciting time to be ready to create and start a future and create a business, start to work. I mean, there's so many opportunities out there. I don't know how anybody is not excited for what lies ahead, given the opportunities that exist. So again, I'm excited for you. I'm envious. I can't wait to hear 40 years from now what's been created, from the timestamp. We recorded this on May 9th of 2025. I can't wait to hear May 9th, 2065, where we are, what we're doing, what's been created.
Yeah.
Maybe finally by then we'll have flying cars. I thought we were supposed to have them by now, but George Jetson's still out there flying around in his car by himself. George Jetson Jetsons were a cartoon back in the 70s or 80s.
I've heard of it. Okay.
Talked about the future.
Didn't know about the flying car though, but I could whip around a little HWM on the side flying car.
There you go. If you have questions, please reach out to us. Again, we only have a few minutes in a podcast to get the message out. Reach out to us. HoffmanWealth.com is our website. Great place to reach out and schedule a call, or emails on there, will@HoffmanWealth.com. If you do have, questions, very active on LinkedIn. Check out our Facebook page. Just make sure you're keeping these things in mind as it's time to start taking those next steps. Again, I'm excited for you. I think Brynn's excited for you.
Yes.
And we look forward to, again, 40 years from now to see what's been created. So until next time, Brynn, you want to take us home?
Of course. Until next time, guys, keep your wealth moving.
Thank you. Will Hoffman offers investment advice through Private Advisor Group, which is a federally registered investment advisor. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult with the appropriate qualified professional prior to making a decision.